What's up, guys? We are into hour 2 of trading. Just took a short break there. We'll take a quick look at our stocks, where we're sitting. SNDL is still looking good. CLOV is starting to do a comeback. I'm actually looking to maybe take a position in CLOV, maybe 250 shares, and kind of see where that goes. I'm liking the pullback or the momentum of CLOV here, so we might buy in 250 shares here. Let's see. Still a little weary with CLOV, but their indicators are kind of good here. Getting a decent RSI going, but I'm gonna wait a sec on that. SNDL, I sold at $1.21 there. Took a tiny profit on that, just because we just about broke through $1.21. We were going down, so I wanted to sell before we crashed a bit. But it looks like we might be building a good old barcoding pattern again. SNDL is famous for barcoding for the day. It just kind of takes off in there, and then yeah, we just go sideways. But yeah, we're getting more selling pressure than buying pressure right now. So I'm looking like I might have made a good decision to get out at $1.21 there. Take a tiny profit. Not where I wanted to be. Gotta follow my my trade plan a little closer. But these dollar stocks are just quick little buy and sell moves. $1.21 is holding. CLOV down 3%. We had a little bit of momentum there. I was tempted to jump in on that, but I did not. This RSI is like neck and neck. It's just fighting sideways. Let's take a quick look at our our multi-view here. AMC, we're down 6%, CLOV down 3.4, on track. We're up 7%, still pretty low volume. Wish, just kind of going up and down, but slowly getting further down, up 5%. Our SNDL 4.3%, 131 million volume. Let's take a look at SPCE, my number one long-term hold. I love SPCE. Got in at 1651. And yeah, it is $37. It's gone up a lot the last couple of days, so I don't blame it for pulling back. I said that yesterday. It needs a bit of a pullback day. You start getting those really big gains. BlackBerry down 5.5%. RSI sitting around 50. GME, shrink you down a bit. For some reason, I cannot get the bars to work on GME. Where are we? View options, chart type. I got candle chart, but it is not giving me. It's not giving me candle chart. It's just giving me a bunch of little tiny dots here. So let's see if I can get this chart to work. Candle chart. No, it just gives me a bunch of blurs. Let's see if we can get a bar chart going at least. I just want some color in this thing. Nope, no bar chart. What we'll do is, you know what, let's get rid of it and see if we can. I think you need to set up the chart before you put the stock in, is what happens. So we'll set up a new chart for that. And we'll get our 2-hour period. And let's get our candle chart going. And let's get our GME in here. There we go. shrink that down. No, it still won't give me the candle chart. Apparently GME is not eligible for a candle chart, which is really weird because all the other stocks, the candle chart works just fine. Alright, down to $1.20, $1.21. We sold at $1.21, which I'm kind of glad we did. Get some good support at $1.20. Having some fun here. Let's take a look at all of our big picture here. AMC down 6.6%. CLOV, we are down 6.5-ish%. On track up 6.5%. Wish is up 3.8%, but we're losing momentum here. SNDL, another fight at $1.20, $1.21. Maybe we will shrink this up a bit and see if I can squeeze in another chart here. If it'll let me know what happened there. Let's get rid of that. See if it's going to let me put another chart in here. That is not what I wanted to do. Alright, well, you know what? We will just add a chart. SNDL. Trying to get a second chart in here. Let's see if we can just fix this up a bit here. There we go. We got candles to work. That's half the battle. And then we will throw in our RSI. And we will throw in our MACD. MACD. There you are. And we don't need to see too much on the MACD. The RSI I like to see. And let's kind of move this to the middle again. We want a period of 2 hours. Oh, why is it doing this? That is not a candle chart. That is just a pile of blurbs. It is not liking me much today. Close that. Alright, well, let's work there. When I switch the period, it changes. Let's go 1 day. There we go. We can at least hold that. Get our, we're going indicators, RSI, indicators, MACD. Switch the MACD down, and let's get this in here. There we go. SNDL on a 1 day chart. Will it let me do a 2 day chart or 2 hour chart without messing up? And yes, perfect. And shrink this down. There we go. Alright, AMC down 7%, CLOV down 3.6%. Are on track, up 4.7%. Move that over so we get our volume. CLOV, just huge volume, 182 million. I wish we are up 7%. SNDL up 4%. 138 mil volume. We are battling it out. We did a little bit of trading this morning with SNDL. We lost a couple cents on one trade. We gained a penny on another trade. So not really making too much ground, but we managed to pull out early before it came down too far. We just got to stick to our trade plan a little better. Yeah, we entered at $1.23. We ended up selling out at $1.21, and then we bought in at $19.95. Sold out at a little over $1.21. So I think we're down like $60, $70. Maybe a bit more, maybe around $100 with commissions. But we're still trying to see if we can get a good position there. We're watching SBCE for the bounce. We're getting a little bit of a bounce this morning. SBCE does not like to go in the negative. Either it usually seems to have a really big pullback day, or no pullback day at all. I want to make sure I got enough money to do 10,000 trades, so I need about 12,000-ish in order to keep that going. So if we want to do an SPCE trade, we'll do like a 5,800-ish, which means we could pick up like 150 shares. So if we want to try and catch an SPCE pullback or SPCE comeback, we'll do around 150 shares. And we'll see how that goes. We had a pretty good day in SPCE yesterday, so it doesn't bother me whatsoever if they pull back a bit today. SPCE has been on just a magnificent run, more than doubling in the last month. I have some huge gains off of that. It's looking good. SNDL, just kind of barcoding that $1.20, $1.21. So I think we might get in on the barcoding a bit. I think today we might try to do a little penny buying and selling. Hard to say. From a technical standpoint, it's a terrible risk reward. It's not really a good trade to be trading, a penny, buy at $1.20, sell at $1.21. It's not really good trading practice, right? I'm not getting a 2-to-1 risk reward ratio. I'm kind of doing myself a little bit of injustice by doing that. But it can be fairly easy to trade. Like, as a stock barcodes, you just buy, sell, buy, sell, buy, sell. So can you make money? Yes, but you're risking the same as your reward. And we don't want to do that. We want to get at least a 2-to-1 reward to risk ratio. So we're struggling a little bit. But we'll see here. Although I'm not liking this. Just as I went to cancel it. I saw that coming down. I was like, oh, it's going to 119. Tried to cancel the order. It would not let me. My clicking's too slow. That's alright. We've been hitting some support at $1.18 this morning. So we'll see how it goes. SPC down 1.2%. So not not really gaining too much. Like I said, it deserves a pullback day from all the gains it's been doing. We're gonna do equity order at $1.21. See if we can make that little tiny trade there. If I see the stock really coming up, we'll cancel that and we'll try and take advantage of more profit. But I'm not sure we're gonna go that way. But we shall see. We'll see what the day brings. Again with SNDL. I bought in at $1.20. Let's see if we can get out at $1.21 or higher. If we go under $1.18, we're going to accept the loss and sell it, which is something I've been trying to get better at, because I have a habit of buying a stock, holding it too long, and then selling it when it's gone down way too much. So I'm trying to get into the habit of taking small losses and take the emotion out of it. Just take the loss and move on. Find another good trade and whatnot. Nobody in the history of trading has ever been right 100% of the time. If you can be right 60% of the time and do a proper risk-reward ratio of 2 to 1, then you're going to be profitable. You're going to be a consistently profitable trader. So one of my weaknesses is still having that emotion in there, like, oh, it's going to go up, it's going to do great, like, oh, just give it time. And it goes down more, and then, oh, it's going to bounce back, and it goes down more, and then you just end up turning a small loss into a big loss. When really you could take the small loss, let it go down a whole bunch, and then re-enter the trade when it's good. You don't necessarily need to take a huge loss. Take a small loss, let it go down, and then re-enter the position if you want to on the bounce back, and then make your profit that way. So we're getting some good buy order pressure here. RSI is still around 41% though. We'll see. Excuse me. We'll see where we end up. Our bar coding might be $1.19, $1.20. We were hoping it would be $1.20, $1.21. Buy order amount's coming up pretty good. SPCE just trying to bounce. Trying to do a little bounce. What's our period here? It's 2 hours. See if we can kind of zoom in a bit. Oh, nice hammer doji. Higher low, higher high, higher low, higher low, higher low, higher high. Would have been good to sneak in right there. Like a lot of good technical indicators showing the trading patterns. See, now we got shooting star starting to come down a little. Oh, it's turning into a hammer. I do want to get a small position on SBCE if I can, kind of pop in and out. What do we got? 59.40 buying power, 37.23-ish. Let's see. We could pick up almost 160 shares if we want. We can do at least 155. 37, 24, 28. Do we want to get in here? RSI is still up 58.5%. Oh man, we're going to break $1.20, $1.21 again. We're going to cancel this. I'm going to look for the upswing momentum. SPCE is still giving her a bit. down 0.6, 0.5. Another fight between buyers and sellers. Might wait for that to come down just a little bit on SPCE. SNDL, we're getting a lot of buying pressure. Buy order pressure, I should say. I think we're going to pop into 120, 121 again. Let's look at our multi-view here, see how we're doing. AMC down 7%, CLOV down 8%, on track up 2.3, just been losing that big gain. Wish, just same idea, only up 2%. And then let's shift this to the old Wendy's. We did a play on Wendy's yesterday, down 9%. You know, most of these meme stocks taking a beating today. GME, oh, nice comeback on GME, up to 2.4. Not looking too bad in a few of them, but yeah, most of these meme stocks, the gains of yesterday are definitely getting pulled back today. SPCE still just fighting. It wants to go back to positivity. It just might. It deserves a good pullback today for sure. It's been making a lot of ground the last bit. We got a hammer doji. You know what? We're jumping in. We are jumping in at 37.33 was our price. Let's just see if we can write that down. 37.33. And keep track of some of this stuff. 37.33 at 150. So we are in SPCE at 37.33. Let's set some goals here. Our stop loss we're gonna do at 36.58, and we're gonna look to sell at 38.82. 38.82 will be our goal price for that stock today. So we're doing our 2-to-1 risk reward. We're risking essentially 2% to make 4%. So if we go down around 36.58, we're going to sell, and we're gonna hit our stop loss, and then we're going to sell at 38.82 if we can. So the stock would have to come up another 3.5%. So we got our position set there. We got our risk reward ratio set up. We got our stop loss set up just in case. And we're going to try and honor those as best we can. And try and make some money. SNDL back to $1.20, $1.21. RSI is at 54%. A little more buy pressure than sell pressure. So we are kind of, nice hammer doji there. But hammer doji doesn't really mean a lot when you're jumping up and down 1 cent. SPCE, we are in the positive. We bought in right here. We saw this hammer doji. We had really good RSI. Everything's going up. Our technical indicators telling us, this stock should be going up. We bought in. We made a play. We pulled the trigger. So now we're sitting in a bit of green profitability there. So we'll see how that plays out. SPC does not like to finish in the red. It's just fighting, going up. Let's take a look at our YouTube multi-view here. AMC, we're down 7.4%. Our meme guys are losing the good fight. CLOV, 5%. On tracks, just losing those gains. Only up 1.7% for the day. Wish, kind of the same thing. Up 3.3% for the day. Good old Wendy's, the old Tendy stock. We are down 10% for the day. We made a play on Wendy's yesterday. Made a little bit of money. And our SNDL, we are barcoding again. at $1.20, $1.21. RSI is coming down a little bit, 51%. We're going to try to kind of 1 cent trade this. Again, not really recommended, not a good strategy. We're not doing a 2-to-1 risk reward. But what we are doing is making $100 a trade. So we'll see how that goes. With SNDL, we're going to try to buy at 120, sell at 121. Because of it, the stock has a habit of just barcoding sideways. So we're going to see if we can do what I call some barcode trading, where we're just buying at $1.20 and we're selling at $1.21. We're doing 10,000 share increments, so we're making $100 a trade minus commissions. My commissions are $9.99, so I'd be making $80 per trade, which is a horrible risk reward. I will admit full-heartedly that is not a proper technical way to day trade a stock like that. I should be looking to maybe get in at $1.20, have a stop loss, $1.18, $1.17, and then look to sell at maybe $1.25, $1.26, right? We want a better risk reward for our money. But I'm just gonna wing it a little bit because this stock is notorious for barcoding. So if it wants to barcode for the next 3 hours and I can trade it in that barcoding between $1.20 and $1.21, then I will. If I start to see the buy pressure really pushing up and the RSI going up, our sell orders start to shrink at $1.21, then I can cancel the order as well and let that momentum go up and then grab a higher profit, maybe $1.22, $23, $24. Make some better gains that way. But if it's just going to sit stagnant, then I can trade back and forth a bit and make a few bucks. SBCE, we're sitting right around where we bought in, 37.33. You can kind of see here, had a nice gain up, then we came down, we got another hammer doji. RSI is 55%, so probably gonna try and spike back up a bit. We'll see how that goes. It's the market, anything can happen at any time. It can just jump everywhere. We can kind of see our price action here. So we got people buying, $1.20-ish. Oh, somebody sold for $1.21. You kind of keep track of how things are going. So each time that $1.21 hits, that's putting us closer to being the next person in line to get our stock sold. I wish with this platform I could do incremental trading, because I would have done like $1.20, 0.999, and that way I would get ahead of people at $1.21. It would just give me a slight advantage for those people buying at $1.21. I could get in a little easier, and then for buying I could set it at $0.2001. Like if you can get a tiny incremental advantage, it would definitely help. But unfortunately, this platform you can only do cents. Can't go any lower. All right, let's take a look at our multi-view again. AMC, we are down 7.4%. CLOV down 4%. Starting to come back a little bit. On track down 2.8. And a little comeback, but still overall kind of dropping. Wish are only up 3% now. Like I said with CLOV this morning, when we were up 6%, we had these technical indicators showing it's going to drop. And I was saying to anybody that was holding CLOV, it's a good time to probably get rid of it. Not a financial advisor, just my advice. And then sure enough, crash. And came up a bit, but it's, from plus 6% to plus 4%, that's a 10% difference, right? So you would have lost 10% of your money, and then if you want to get back in the position, you can. So you can, sell when you start to see, any of these indicators when you're like, oh crap, we're starting to lose it. And you can always, buy back in at a lower point when you start to see it come back up. So you still have the position, you're still supporting the stock, but your entry and exit are really important. So you would have exited at a decent time, and then you could have re-entered at a better price. So we're on track, up 2.8, Wish 3.3. Good old Wendy's down 10%. Wendy's trying to pull itself back up a bit, but Wendy's, there was no catalyst whatsoever for the stock to do this. It was just the meme was tendies. People wanted tendies. Chicken tendies at Wendy's are really good. So yeah, they bought in for fun. I bought in yesterday as well. Do you think Wish will go back up? Let's take a look. Take a closer look at Chuba. Let's do our. See. Sorry, one sec. We're starting to get good buying pressure here. So we are going to cancel this order. If it lets us, it doesn't. We always miss it. We click too slow. Every time I try and cancel the order as it shoots up, it doesn't let me. I lose it every single time. Blown up chart. Let's take a look at Wish. Let's see what we got for Wish. We'll take a nice big close look here. Alright, so we're looking at our volume as well, right? Volume or MACD. Like our RSI, we're pretty much fighting right now, Chuba. We're the buyers and sellers are fighting. Nobody's quite winning right now. So it's hard to say. We'll go back a little bit to a couple days here. $15, geez. Stock was really popping for a bit there, eh? So yeah, I mean the value per se of this stock is a little closer to $7.70, maybe $8, and then just a huge gap up, big engulfing candle down. Let's take a look, because we had some Wish stuff up here. So yeah, we're way like 15 times the daily volume. We were looking at Wish from a short perspective. The short interest isn't that high, like maybe 5%, right? 331 million short interest of a 619 million share outstanding shares, so not like a huge short interest. We were looking at trends on Google Trends here for Wish, and it's starting to trend down. We could see even from this morning, if you saw before I refreshed it, it was a big trend up. Now it's starting to trend down. So if Wish if it's being used as a meme stock, which it kind of is, like there wasn't really a catalyst for it to shoot up, right? There's not really a reason for Wish to shoot up other than people just pumped it in the last day or so. So in my opinion, unless Wish gets a bunch more interest in it, there's no reason for it to go back up. There's no reason for it to shoot, to $12, $13. Generally with stocks you need catalysts, and the only catalysts for the stock are lawsuit. So if generally the meme stocks, people are buying them to try and short squeeze the shorts, right? This has a very small short interest. It's not a short squeeze play. It's starting to trend down. People are getting less and less interest in it, and it's coming down for the day. We're starting to see it come down. People are taking their profits. So just in my opinion, I would say no. Wish isn't gonna go back up, because there's not really a reason for it to go back up unless people push it, right? If you get a pile of people buying the stock, for meme purposes, I don't really see a catalyst for trying to do a short squeeze. The short float's tiny. So I don't know why I can't, if somebody asked me, convinced me to buy Wish, I wouldn't be able to, because I just don't see a catalyst for it going up. It's not a short squeeze candidate. The short interest is too low. So no, I don't think, in my opinion, not a financial advisor, that Wish would come back up. If I had Wish stock, I'd sell it, be done with it, and I'd start sticking it in some other plays. That's the problem with the meme stocks. And we addressed it a little bit during the pre-market show, and about an hour into trading, is you have your two main meme stocks. So you've got your AMC and your GME, but we're starting to branch out. So now we've got Wendy's, we got Wish, we got CLOV, which is a short interest play. We got On Track, we got AEMD Medical. So you have all the retail traders' money is in AMC and GME to begin with, right? That's our big meme stock. So we have all this money in there, tons of money, and then we're like, okay, we want to start branching out. We want to do this short interest play. We want to do this meme stock. Wendy's got the tendies and Wish. You need money for those stocks. So what I think is happening is all these people in GME and AMC, they're starting to pull this money out. And as they pull this money out, they're sticking it into these other meme stocks. So, but the problem is, you go into Wendy's or CLOV for short squeeze, or Wish, and then as those stocks start to come down, they don't have the same integrity that AMC and GME do, right? Like, people have been going into those for a while. They're super popular. They're all over the news. People are making these big plays. So it's like, where are you going to get the money from for these other stocks? And these other stocks don't have the same merit that AMC and GME do. So I think the problem is you're starting to see money come out of those. They're going into these smaller companies, these smaller plays, but these plays don't have the same integrity, so they're losing interest really quickly. So like Wish, everybody just slams into it for the day, makes these huge gains, and the next day people start taking profits. They want their money back. They want to take that money, and now they want to play CLOV, and then CLOV shoots up, and then they want to take that money out, and now they want to put it in Wendy's or in SNDL, or maybe back into AMC when it starts to come back up. So I think what we're seeing is a limited pool of money in AMC and GME being pulled out, and maybe 10% of it comes out of AMC, and then it goes into CLOV, and then 8% comes out, and they put it into Wendy's. So you're starting to see the money bounce a bit, as opposed to just being in kind of two main stocks. So I feel like these other companies, they're not doing quite as well in the long term, right? These are more like pump and dump. I know that Wall Street Bets hates the expression, but that's what's happening. People are pumping them in, they're shooting up, they're taking their profits, and then people that get left, diamond handing it, or bag holders, you're stuck with a stock that isn't going to be worth as much because it's going to lose interest. So then they're going to start to come down and down and down. And if you don't have the discipline, if you have too much emotion in your trades, then what's happening is you're keeping this emotion, you're holding it, you're like, yeah, I'm diamond hands, but everybody else is leaving, and you're going to end up holding this stock that went up 80% and then comes back down 80%, and then you're going to take this huge loss, and you're going to be like, where was everyone, I appreciate the whole explanation, but I put $450 into it, and I'm down $50 now. In Wish, where do you recommend I put it then instead? Like I said, I'm not a financial advisor, but I can give opinions all day long. You can follow me too as well and kind of see the trades that I've been doing throughout the day. Where would I put it? I mean, like right now, I'm just kind of increment trading SNDL. If you were looking for something like, if you were looking for a long-term company, I would throw it in SPCE. That's Virgin Galactic. That's the company that's doing space tourism. We're actually waiting on the next test flight announcement to come out. We're actually getting close to our SPCE 3658 stop loss. But SPC for the long term, I would definitely put the money in. If you're looking to make a quick buck, like just kind of jump in, jump out, I've just been following the Wall Street Bets kind of trends, their trading trends. So you could try and find a company that is just starting to hit popularity. Like a lot of these are pump and dumps, and a lot of the guys, They say that, don't call it a pump and dump, but they are, right? Like, so you could find, what's the next trending stock on Wall Street Bets, or what's trending on Google. Because what's been happening, like yesterday, I learned about Wendy's. It popped up on my news feed. It was only an hour old. I jumped into Wendy's. I can kind of show you my trade yesterday with Wendy's. So Wendy's, it was a trending stock that I found out about. I jumped in at 27.44 as it was going up. Had lots of momentum. RSI was good. So I jumped in at 27.44. It was still going up. So I jumped in even higher at 28.77. So my average cost between the 300 shares and the 330 was 28.15. I wanted to protect my profits, so I set a stop loss at 28.57. It did hit the stop loss, and then of course it went back up. But this is a good example of a momentum trade, or instead of it's like a meme mania, I guess. So if you can find a meme mania, get in early and jump on with that momentum. Like, let's say in your example, you got $450. Let's say you use your $450 and you bought it at 27.45. You bought 16 shares, and then at the end of the day you sold those 16 shares for 28.57. Well, you're up $7, right? You made $7. Doesn't seem like a lot, but percentage wise, you're up a couple percent. I always do this backwards. Yeah, so you would have been up 1.5, 1.6%, which in a day trader's perspective, if you can grow your portfolio by 1% per day every day, you're doing really good. So if you can find like a quick, meme mania stock like that to put your $450 in, I'm guessing you're a Robinhood trader and you don't have commissions, so you can trade like that. For me, I do it through the actual bank, so I pay $10 per buy and sell. So I need a little bit larger chunk of money to work with. Yeah, I've been chatting it up. I've been watching my SPCE. Got a good shooting star there, indicating going down a bit. 36.58 is our stop loss for SPCE. Yeah, long-term wise, Chuba, I'd throw it into a company like Virgin Galactic. You're just waiting for the next test flight announcement. Will be a catalyst for that stock to take off again. I bought in at 16.51 just before they announced the last test flight. And then if you're looking for short-term, kind of to make a quick buck, you could swing something cheaper like SNDL. You can buy and sell. Or just find the next meme stock on Wall Street Bets or some of these other forums that they literally just pick a random stock and they just smash it for the day, and then the next day they take money. Weed stocks have been a bit hot lately too as well. Tilray is up 10% for the day. So yeah, you can try and find different sectors that are doing good, and try and kind of jump in on the bandwagon there. You gotta find a good entry, find a good exit, which is the hard part, or just find a good company to buy and hold, right? Like a SPC, I have my RSP, Kids RESP is in that company, and I got in at 16.51 before they announced the last test flight, and I just sat on my hands with that. I didn't want to trade it. I didn't want to do anything. My day trading account, I had it in SPC as well, and I sat on that right up till about $30, and then I took that money out so I'd have some money to play with, and then I started kind of day trading that back and forth, and now just kind of trading a little bit here and there. I mean, you got no commissions. That's awesome. So right now we're trying to buy 10,000 shares of SNDL around $1.19. We got a lot of sell pressure still. but it's just kind of barcoding today between $1.21, $1.19. So if we can get in at $1.19, sell at $1.21, we're making $200 a trade. So not too bad. SPCE still going down. We put around, what did we put in there? We bought it 37. We bought it at 37.33. So we spent about $5,600 trying to catch a bounce there. And I kind of stopped paying attention. Yeah, we bought in 37.33. Yeah, we bought in right around here, I believe. And then we got kind of into all the fun stuff. We are getting near our stop loss. Oh, I'm starting to bounce back a bit though. This is why we set a decent stop loss. I have a habit of setting really tight stop losses of like 0.5%. So had I have done that, I would have got stopped out like right in here, which I guess overall would have been a good thing if I rebought. But sometimes you gotta just let her buck a bit. SNDL's coming up a bit. 121, 122. Just bouncing in that little area there, which is good. So we pretty much have a ceiling today so far, at least in the last couple hours, of $1.22 and then a floor around $1.19. They're just kind of bouncing up and down here, trying to make a few bucks as we go. Penny stocks, of course, super volatile. Tilray up 12%. SNDL usually follows that pretty closely, but it's lagged a bit, so I wouldn't doubt if SNDL is going to continue to climb a bit here. I don't know if it's going to break that $1.22 though. We'll see. And if it does, we might hop on board if we're going to have a little breakout to cancel our buy order, which I was hoping would get filled. Not quite. I can't do incremental trades, unfortunately. Like I can't do, a $1.19.001. Then the order would get filled a lot quicker, because then I'd be first in line. I'm offering just a tiny bit more than other people that run through banking platforms that you can only do 1 cent increments. I'm in Robinhood. Do you recommend another app? I do it through though because I enjoy day trading, but I'm getting flagged for day trading on Robinhood. Also, thanks for the advice you've been giving. I really appreciate it. Yeah, no problem, Chuba. If you like the advice and you like the channel, feel free to give me a like and a subscribe, and that'll kind of help me with the channel a bit. I'm trying to get it out there more. Eventually, this is what I want to do full time. I have a business education. I'm working on my chartered financial analyst in school right now. I'm not a CFA right now, but it is a goal of mine. I'm about 3 courses shy of my level 1. So I'm still trying to bang that out. So yeah, any thumbs up and subscribes I appreciate. As far as other apps, so right now you're getting flagged for day trading. So with day trading, and we got nothing's really happening. I'll just show you quickly why you're getting flagged for day trading. I believe it's 25,000. Yeah. So you can see here the required minimum equity must be in the account prior to any day trading activities. If the account falls below 25,000 requirement, the pattern day trader will not be permitted to day trade until the account is restored to 25,000 minimum equity. I believe that's if you do more than 3 trades in a week. Don't quote me on that, but it's something like that. So what's happening, Chuba, is because your account is under $25,000, you can't really day trade. So you need to have your account above $25,000 in order to effectively day trade. So your app itself doesn't really matter. So if you're in Robinhood or you're in a different app, you're still stuck, because that's like a U.S. law that you have to have the account at 25,000. So it wouldn't matter what app you're in. If you're day trading, you still need to have over $25,000 in order to day trade that. I'm in Canada, so our amount is 10,000, and then I'm day trading with around 18,000. So I can still do the day trading because I have enough capital in the account. Candy Max, this is really bad advice, just joking. If it is bad advice, Candy, or if anyone else thinks I'm giving bad advice, please feel free to let me know. Or if you have a different opinion, like, let me know, let's discuss it. I'm just the same as a lot of people out there. I'm still learning, like, every day. I'm learning, I'm making mistakes like crazy. I have made a ton of mistakes. Even today, I so far for today, we're down a bit of money. So I welcome any constructive criticism or any different points of views that you guys want to throw out there. You just go right ahead, and then we can discuss it. We can learn from each other. We can grow together, and that's kind of the fun of all this day trading stuff, right? Is being able to do that. Like, we're having a blast together. We're having fun. I'm losing a bit of money. That's alright. We're still trying to pick up some more SNDL here around $1.19 and see if we can day trade that a little bit again. Our SBC, we're down 2.8% now. I missed my stop loss. I'm getting a little too into everything. But SBC for me is a long-term hold. The stock could go to $35. It wouldn't even affect me. I'm still going to hold on to it. But we want that capital for day trading, right? So we should be exiting our positions each day, so we have cash for the next day, right? We generally don't want to hold overnight because you don't know what's going to happen overnight, right? So yeah, for day trading, you want to cash out of your positions at the end of every day. For swing trading, which is 1 day or more, you can hold positions for a long time. But we're generally just focusing on day trading today, kind of seeing what we want to do. Did I explain that the trading thing decently there, Chuba? Let me know. Yeah, it's basically just in the U.S. you have to have an account of 25,000 or more to day trade. So it doesn't matter what app you're in. It's just not based on the app. The app has no control over that $25,000 limit. And then in Canada, I believe it's $10,000. So you're able to buy and sell stocks, no problem. Let's take a look at our YouTube multi-view here. AMC down 8.7%. CLOV down 14.8%. On track. They're losing those gains. Only up 1% for the day. It's kind of fading away. Wish. Like I was saying, Chuba, it's not looking good. There's no catalyst for it to go up. It's trending down on YouTube as far as people's interests are concerned. It doesn't have a reason to come back. It doesn't have a reason to go up unless a bunch of people are going to shoot a pile of money into it, right? And yeah, we're at down 1.8%. So yeah, if I was in Wish, I would have cashed out a little while ago. Wendy's down 11%. Again, it's another stock that yesterday we'll do a 2-day period because I got it on Wednesday as well. Because why wouldn't you? Let's do 2 days. So yeah, this huge gap up, and then market kind of settled, and then yeah, we just started getting these big gaps as people learned about the stock. I got in right around here, I think 27.40ish, and then yeah, I sold out at 28.57, somewhere down here a bit. So like Wendy's, it's the same thing, right? There's no reason for the stock to keep going up unless it keeps getting pushed, unless people have that push together. It's popular, everybody just puts money in. There's no actual catalyst, there's no reason for Wendy's to go up. So people are just taking profits now. Same with CLOV. Like CLOV had a bit of a reason, right? They wanted to do a short squeeze the CLOV itself, when we looked at the short interest for CLOV, it was a bit high, right? 40 million share short interest of a total of 408 million shares. So 10% of all outstanding shares approximately were being shorted. So it had a higher short interest, and it depends on when this was. That was last updated today, so that's not bad. So it had a bit of a short interest. So there was a reason for people to put money in. It was for the short squeeze, which happened. There was a big squeeze. Short started to cover. Stock went up and up and up, and then people started to take profits, and then you kind of get this bounce again, right? But if the short squeeze is already done and people are taking profits, well, CLOV's just going to go down. Right now we're down 15.6% for the day. So unless they're going to try and squeeze it again, there's no reason for the stock to go up. So if you've got no catalyst, you got no reason for a stock to go up. It's generally not a good investment, right? AMC, we're down 8.7. The volume on this stock has been crazy today, 213 million. Their average volume was like 10 million or somewhere around there. It was tiny. Yeah, 35 million. So we're like over 20 times the average volume. All right, our on track, it's dying out. We're only up 1.5% for the day. A lot of the meme stocks, I wouldn't even call them meme stocks, but a lot of the stocks that don't have catalysts to be as high as they are coming down today. And a good expression I read in one of my finance books is you have price and value. So the price is, the price of the stock. So say the price is $20. Well, the value of the stock, based on a fundamental analysis of their sales, their earnings per share, their free cash flow growth, etc., that's your value. So a lot of these meme stocks are valued at, say, $10, but they're selling at $20. And the expression used is your value and your price is like a person walking their dog on a leash. So a lot of times the dog will get ahead of you. It'll take off, right? The price will take off, but it'll still be on a leash. So the price won't pull, super high from the value. And then eventually the dog will come back, and then, maybe you're still walking and the dog's behind you. So your price is under your value, and then people start to buy into it because it's an undervalued or an underpriced stock for its value. So it's kind of just this back and forth that you get between price and value. And right now these meme stocks, their prices are just way ahead of their value. So eventually over time that price is going to come back to its value. You can't just have like stocks like AMC that are only worth maybe $6 to $9 unless only retail investors bought shares and everyone held the shares. It's not going to come down. And what's happening with companies like AMC is in a way they're taking advantage of the situation, and it's a really good business move because what they're doing is they're issuing new shares. So if we look here, we'll use AMC as an example. So AMC outstanding shares, where's our outstanding shares? Our market cap, closed shares, volume. I can't even see it in here. Let's look at statistics. So AMC has 513 million shares. But what they've been doing is they've been issuing new shares, right? The stock's so high that they issue new shares and then they sell them. So what happens is it dilutes the current shareholders, right? So like if everyone bought and held the shares, then you could artificially keep the price up. But as the company adds more shares, unless everyone buys those shares too, then you can't really keep the price way above its value, because then the company will just keep adding shares and they'll sell those shares and they make a huge ton of cash, which is an excellent business point of view because you need that money to keep a business like this going. Like its profitability is terrible. Here's our income statement. Revenue per share $2. All right, growth, it's shrinking. It's because of COVID. Like it has a reason that that this is happening, right? Diluted shares. I mean, our balance sheet, their cash is way up because they issued new shares. They sold them at ridiculous prices, and people bought them to support AMC. But like their debt is still $11 billion. And like, yeah, the theaters are going to open back up. They're going to start doing business again. That's great. And I think as things settle down, you're going to start to see AMC come back down to earth a little bit. So let's take a look. Let's see how our SNDL is doing. Still kind of fighting around that $1.20 range. SPCE down a bit. Let's take a look at CLOV. So CLOV down 12%, still going down. Like I said, I feel like the short squeeze is over with CLOV. It was a get in, get it done, get out. And they did that yesterday. They did it very sneaky, like there was no news about it, nothing, unless you were like in real good with those guys. You wouldn't have really seen it coming until the next day, right? Until today. Yeah, yesterday they smashed right in there. It was a good play. They got in, they squeezed it, the shorts covered, and they started taking profits. Today people are taking profits. So anyone jumping into CLOV, like that's a dangerous spot to be. This, the value of this company is not $20 a share. It was just a good, quick, short squeeze play. It was a transference of wealth, basically, between retail traders and institutional traders or hedge funds. Everyone says hedge funds are terrible, which I get. It's the big guys on Wall Street. You got to realize a lot of these big guys or companies on Wall Street, these are everyday traders or everyday investors that put their money into these hedge funds, and they do that to make money or to build for retirement, right? So sometimes you see these hedge funds that lost $4 or $5 billion, and everyone's like, yeah, we got them. You just killed someone's retirement. Like this money for these companies, it all comes from the people. Like, yeah, a lot of these people are super rich, and we do want to try and balance out, the wealth overall of the world, because the rich are getting way richer and the poor are getting way poorer, and it's the poor people we kind of want our piece too, right? So I get that, but sometimes it's these poor people saving for retirement that put money into these investment funds, and those investment funds short companies, and then they lost billions. It's the money in the company is a whole bunch of people's money, right? So those people lost out. They lost money, and you get a transference of wealth from those people to, your retail traders. So yeah, you take a bit of money from the super rich, but you can hit some of the poor and working class as well with those kind of trades, which is fine. I mean, the whole point of trading is to make money, right? Like this has to be taken as a serious career if that's something you're going to do as a day trader or as a swing trader, right? This is like a professional business. So I'm not sure if our SNDL is going to come down again for us. We are barcoding between $1.20 and $1.21. Let's take a look at our multi-view this morning. AMC, we're down 8.8%. CLOV, we are down 14%. On track is just trying to hold on to that green, up 1.7%. It's struggling. Wish, we're at 0.9% down. And it's trying to get back into that green, and maybe it will. We're getting a good little push there. Let's switch this to, we already have it 2 hours. It's trying to get back up. Wendy's down 11.2%. Like I said, I got into Wendy's, got out. There's no catalyst for the stock to have almost doubled. So yeah, we'll just keep on keeping on. Look at our main view here. Let's see. How's Tilray doing? Tilray up 11.52%. SNDL usually follows decently closely, up 4%. We might buy in at $1.20. I'm kind of liking SNDL today. I don't know why. Hasn't been the nicest company to me. Let's see if we can get in at $1.20. RSI is sitting kind of flat, 45%, 51%. Let's see if we can jump in here at $1.20. SPCE, we weren't very disciplined. We came under our stop loss. Unfortunately, I was kind of chatting it up and missed out a bit on our stop loss. But I love SPCE. I would leave that money in there. Next test flight's going to get announced, going to shoot up again. It's a fun company. It's new, it's exciting, like it's space. Space is hard. So I'm really enjoying being invested in SPCE. I got most of my money in SPCE. My RSP, my kids' RESP, it's stuffed right in there, nice and deep. And I'm just sitting on my hands with those two accounts. They've more than doubled in the last month. It's definitely my favorite long-term hold company right now. It's a company I'm going to hold for years. Be hearing on the news, people up in space enjoying no gravity, and I'm going to be like, yeah, I own a good chunk of that company. I'm happy. Oh yeah, SNDL is kind of going sideways. If you guys got any stocks you want to take a look at, let me know. Just bring it up in the channel here. We'll pull it up. We'll see what we can see. And we'll have a bit of fun with it. And day trade away. Trying to make a few bucks this morning. Oh, we got a part fill. Oh, price is coming down. We're not going to cancel it though. I think we're going to hold it there. Alright, we got in at $1.20. This is the problem with trading like 10,000 shares. It fills a lot of space. So, got in at $1.20. Let's see if we can kind of swing it again at $1.21. We're just kind of bouncing up a few cents here and there. So we'll sell $1.21. Submit that. So we'll see if it gets a lot of forward momentum, we'll cancel the $1.21, see if we can capitalize a little higher. RSI is at 31%. Somebody did a big sell-off, or some institution did a big sell-off. Tilray, we're still up 10%, so we're actually looking pretty in comparison. Like SNDL usually follows, it's usually a little tighter than 3 to 10%. Usually it'd be like a 7% to 10%. So I think we're gonna see it come back up to that $1.20, $1.21. And we'll just keep kind of bouncing around there, making a few bucks here and there. Let's take a look at our big view. If anybody has a stock they want to look at more in depth, I can do fundamental analysis as well. I mean, most of the trading these days is meme stock, but originally I'm trained on fundamental analysis. That's where my education is. That's where most of the books I read. So we can do deeper analysis of companies from a fundamental level, or we can do technical swing and day trading analysis companies that are swing trading, which is mostly what I've been doing the last while, because they're super popular. Most of the money is going into these meme stocks and short squeezes, and you got investors like Warren Buffett and some of the other guys that are just like, what the hell is going on? And the fundamental analysis companies are kind of dying a little bit compared to these meme companies. We got AMC down to 9%. CLOV still crashing down 13.5%. If anyone was watching with me earlier this morning, when CLOV was up 6%, I was like, sell it. Like it's everything's indicating that it's going down. Like just sell it, take your profits, get out. And now it's down, almost 14%. So it's down almost 20% from this morning's opening bell. It's the short squeeze. In my opinion, it's not a financial advisor, but in my opinion, it was over yesterday. They squeezed, they took the profits, and then they've just been taking profits throughout the day today. They're not really a good play, in my opinion. On track, just trying to hold that green, just holding on for dear life, up 2%. Wish, kind of just slowly working down 4%. Somebody asked me earlier, would you get rid of Wish? And I was like, there's no catalyst for it to go up unless people pump more money into it, right? And then you got to think with a lot of these companies, before they became meme stocks like Wendy's or Wish or whatnot, people had a pile of money in these stocks already, and they're hoping for just slow gains over time. Like Wendy's is excellent; it's been growing over time. Sales has been going up. They open locations in the UK. It has these catalysts for small gains over time. Well, if you're an investor in Wendy's and yesterday your stock just shoots up like 28-30%, you're like, wow, I just made 30% on my money in a day. Like a lot of these institutions or retail investors that didn't buy it as a meme stock, that bought it for its fundamental values, they're selling because they're like, I'm making 30%. Like, why wouldn't you? If you made 30% in a year, you're doing amazing. You're going to beat the S&P 500 and whatnot, the average. So they start selling, they start taking profits, and then if people pile money in, to keep it going, but it's not going to keep going if the institutional investors start taking their profits. So then you're kind of losing out. So yesterday I did a quick buy. I bought in on momentum, and then I sold as it came down. So they're good for quick plays, but if there's no catalyst or no huge support for the stock to go up, there's not much point in bag holding it and diamond handing it when you're just going to be stuck kind of holding the bags by yourself. At least AMC and GME had huge support, right? There was a huge amount of people to put that money in, right? So they're able to artificially keep it up. SPCE still dropping down. Trying to pull back a little bit. Might see some resistance at or some support at 36. It's gone up a lot the last few days. Like I said a while ago, it needs a pullback day, and it probably will get a pullback day. It deserves it. It worked really hard. So yeah, we do have some good support here, at least in the last couple days. Around that $36 line, which we broke. That $35 line was a resistance level for quite a while, and then we finally broke through it, and I think it turned from resistance to support. So now we got a support around $36, $35.50, 36. I think we're starting to see that here today as well, getting around $36, hoping that it holds that support. And then we see a little bit of a bounce back throughout the day. SPC likes to start strong and usually just kind of dip down for the day, or it'll start weak and then slowly go up for the day. And we usually get a big change near the end of the day. So I've been following that stock pretty closely because I have probably 2/3 of everything in Virgin Galactic. I got big ambitions for that company. It's new, it's exciting, it's space. Space is hard. You're going to have some fun. So yeah, if anybody has a stock they want to go over or check out, let me know in the comments here. And if you can help me out, just give me a quick like. And if you like the channel, hit subscribe. I'm trying to build up a bit of a community here. I started the channel 3 months ago, but my work schedule has made it a little hard for me to do it every day. But I do plan on eventually doing a shift from working to just full-time streaming and investing. That's my lifelong goal. I'm sure a lot of you share that goal too. If you can find your passion in life, pursue it. Even if I fail at this, I would rather fail at something that I love than fail at something that I hate. So I'm just gonna keep on keeping on and try and build and grow this into a fun community. Like I said, if you guys got any comments, if you have any opinions on the stocks and whatnot, we're all learning together. We're learning every day together. I'm making mistakes. I made a mistake today. I lost, a couple $100 just between SNDL. And if you can learn from it, or as Ray Dalio says, pain plus reflection equals progress. So if you can look at these mistakes you make, reflect on them and be like, oh, here's where I made the mistake. All my technical indicators were showing I should have sold, but I held it. It got too low and I didn't sell it, or whatever your situation might be with stocks. Then you can learn from that. We can all learn. Like trading is a zero-sum game. Right? For every dollar you make, somebody else lost $1. So either that's a hedge fund or another trader or whatnot. So it takes a while to get into a place of being constantly profitable and whatnot. And you have to be better than the average bear. You have to be better than the average person. And a lot of these hedge funds spend millions and millions of dollars, or hundreds of millions even, trying to get an edge that you don't have. So we can all learn together while we trade from our mistakes and from our progresses too, right? I've always learned the most from failure. So it sounds terrible, but the more mistakes I make, the better I can become, because the more learning I'll be able to do. All right. So yeah, if you guys have any stocks you want to look at, anything, whatnot, we can do that. I'm just going to keep shooting through here. We got our AMC down 9.5% for the day. They broke under $50. We had some support at 50. We are under. The guys are fighting the good fight here. CLOV down 18.2%. I said earlier in the day when it was up 6%, dump it. There's no reason to keep holding that on. On track, making a play back. Nice little jump back here, up 5% now. Wish down 5%. I had a gentleman in the channel ask me about Wish. Should I stay in? And I was like, nah. You need a reason. You need a catalyst or some indicators or something to show you that the stock is going to bounce back. Our RSI, we're under the heavily sold now, where we were just a while ago. The people are dumping for profits. So as far as technical indicators are concerned, the stock is just going to keep going down. Which doesn't mean you can't have it bounce back. You can't predict the market. You can look at the information that's available to you and do the best you can with what you got. That's pretty much all you can do, right? And then with the information provided, stocks like Wish and CLOV and Wendy's, there's no reason for them to bounce back. AMC, I still think the theory of money is being taken out of AMC and GME and put into these other stocks, I still think that's pretty relevant. Let's check out our main view here. Take a look at all our other stocks. So AEMD was up 400% at the start of the day. It's up 355% still. It's just giving her our CLEN up 17%, Tilray 10%, GME 5%, OTRK 4.3, SNDL is just fighting around that $1.19, $1.20. Barcode again. Ooh, just had a big sell-off. Not good. Down to $1.18. It's been finding support at $1.18. MJ up 2%. There's our SPCs down 5, AMC down almost 10, Wendy's down 11, and CLOV down 18. So we hit our support at $1.18 on SNDL. Let's see how that does. There's a couple more stocks I wanted to add here. Or do I have them all? I have Wish in here. Let's get Wish going. Yeah, we got some people out there wanting to track Wish as well. There we go. Yeah, CLOV down 17%. Just taking a beating today. Oh, SNDL, $1.16, $1.17. Just a big sell-off. SNDL just struggling lately. I probably should have set a stop loss for that, but we'll see how we bounce here. Let's look at our not our frequency, our period. Take a look where we got some support here. $1.10 support line in the last few days. $1.13. Well, it's safe to say it's got decent support at $1.10 over the last 5 days. A little higher the last couple of days, 2-3 days. We'll see how that plays out. Here we go. Got some buying pressure. Yeah, so somebody did a massive sell-off. You can see the volume here. A couple big sell-offs. Now we got some positive volume. Go baby go. Still got a pretty good chunk of sell orders at $1.18. Might come back down to $1.16, $1.17. At $1.17 is just struggling. RSI is under, or I should say oversold. Trying to hold. Trying to do it. SBCE. Take a look at our main stocks here. AMC down 11%. CLOV 18%. I hate to say it, but CLOV was a good short play today, even though they did the old short squeeze. On track, up 2.4%. Made a nice little run there and came back down. I wish it's still just dropping. 8.3%, heavily oversold. Same with Wendy's, heavily oversold. RSI is at 24%. It is looking like a down day at the moment for a lot of these meme stocks. Overall market pretty flat. Dow Jones down like 0.1%. S&P is pretty much flat. $1.17, still just fighting away, having fun. Let's look at our top gainers. I haven't done that in a little bit here. Our top gainers for the day. AEMD, Medical and Geo. What is the Geo group? I haven't seen that one yet. They're up 44% for the day. CMLTW. Not sure what that is for the day. It's a dollar stock. Up 30%. AMSWA, some software companies up 26. C-Tech up 27. A lot of these companies doing pretty good. IVR slowly climbing up. Invesco Mortgage something. Impact Mortgage. Got a couple mortgage companies just giving her. And got our top losers for the day. CLOV. I love how on our watch list we have the top gainer of the day and the top loser of the day on our stocks. Well, our top loser, not the top loser in the US. The top loser is Atos Therapeutic, Unified, NTRL Foods, and then of course CLOV, which I said when it was plus 6%, it's time to sell. It's going down, not doing good. Alright, back to our main view here. Getting a little bit more support at $1.17. It's trying to get there. SPCE still, yeah, found that bit of support around 35.50. Trying to bounce back a bit. Like I said though, SPCE needed a pullback day. It was doing way too good for, let's take a look here. Here's our 5 days. Up. Nice two solid days of gains here. Still haven't even announced the test flight. So yeah, it needed a pullback day. Needed a rainy day, as it were. And it can consolidate and continue on its journey up. Alright, RSI is still pretty low in SNDL. It is a little lag though. We're seeing buy and sell orders around the same amount. It's got a little pressure to go up. Well, equal pressure right now, but we'll see how that goes. Yeah, if you guys have any questions, any stocks you want to take a look at, we can do that. I'm trying to squeeze another stock in here. Got some flex sheets here. When we were checking out Bitcoin. Oh, big gain there. Let's do 5 minutes. Yeah, Bitcoin not really the greatest investment the last bit. But what can you do? SNDL, Wendy's. These stocks are just fighting away. Let's go back to our multi-view here. AMC down 10%, CLOV down 17%. Trying to do a tiny pullback. On track. It's holding around 2.5% green. Wish trying to do a little bit of a pullback. Wendy's, nope, down 12.2%. Yeah, right at 10 a.m. You guys notice that? 10 a.m.-ish. All these meme stocks just kind of moving up as a group. There are larger forces at play. SPECE still holding around that $35.50, $36 support level. We're getting some more buying pressure here from SNDL, $1.17. Jaden Jung, yeah, thanks for the question. What do you think about Wish? You're actually like the third person to ask me about Wish. Let's pull it up here on our multi-view. I'm pretty bullish about Wish right now, overall. I think people are taking profits today. We're down 4.3%. I'll show you, we'll dive a little deeper into some of the Wish. So Wish, it kind of came up as a little bit of a meme stock. It's what it is it operates a mobile e-commerce company in Europe, North America, and South America. Operates the Wish platform that connects users to merchants. So it also provides marketplace and logistics services to merchants. So it's a way to help connect people and businesses, right? That's basically their main thing. As far as catalysts for it to go up, it's riddled with lawsuits. So you generally don't want to buy into a lawsuit. Sometimes it's not a big deal. Sometimes it is. Wish became kind of a meme stock yesterday, and it got bought quite heavily. So it got pushed up by people for no real reason. Like, it didn't have an actual catalyst to shoot up. It just, unless you think a bunch of lawsuits are catalysts. So it didn't have a real good reason to go up, but people pushed it up as a meme stock. So if we look at the short interest, what was it, a short interest play? No, I don't think it was. There was only 31.4 million shares worth of short interest. They have 619 million total shares. So only 5% of the stock is shorted with Wish. So not really a good reason. We also looked at the trends, Google Trends, right? A lot of these meme stocks, they trend, and we can watch that. And we can see that Wish has kind of trended down today. Let's do the past day. So we can kind of see 24 hours. So, it started to gain steam. People are more and more interested. And then, as the day progressed, we've been losing interest in Wish. So there's no catalyst for it to go up. It's got a pile of lawsuits. It was a meme stock, like a quick pump and dump. It's trending down, and the technical indicators of the stock are going down as well. So you see, Wish starting to pull back a little bit, but I don't know, what's your buy-in price, Jaden? Because with any stock like this, I would set your targets, right? What's my stop loss? What's the most I'm willing to lose before I cash out? And you can have a small loss instead of it turning into a big loss. So you could pull that out, and then, or have a goal. Where do I want to sell it? I know a lot of the meme stocks is you just want to buy it and diamond hand it, but all these diamond hands, they're eventually going to sell. When you start to see your account crash, like you do with AMC, it's down 10% today, and it just keeps kind of working its way down. You're going to see a lot of diamond hands turning into just taking their losses. So if you're going to take a loss, try and take a small loss, not a big loss, right? So for me, I'm pretty bearish on Wish. It just doesn't have reasons to go up other than it being a meme stock and people pumping into it. So for me, it would be a sell for sure. I don't think it's gonna come back into the green unless there's a big support for it by people. Yeah, if you're in at 16, Jesus, I didn't even know it went to 16. Are you sure you're in at 16? It didn't even go. Or are you in at 16 Canadian, and it's an American stock? Because I don't even think we saw $16. Did you get in at 16, or did you buy it a long time ago? Am I not looking? Oh yeah, I'm not looking back far enough. So you got in probably somewhere around here. Yeah. So this is why it's important to set stop losses for a lot of these stocks, because we all get emotional about stocks like this, right? When you buy a stock, if it goes down, you feel psychologically like you failed. You're like, oh, I failed. I did a bad decision, but it's okay. It'll come back up. It's good. We're gonna go up to the moon, and over time, as you develop as a trader, you need to try and take the emotion out of that. You need to try and find a way to not emotionally trade, right? So if you bought in at $16, maybe set a stop loss, $14.97 or something, or a couple percent down from where you bought in, even maybe like a $15.50. So yeah, kudos to you for staying along for that emotional roller coaster, but it's probably not going to be a very good ride. Because it needs a reason to go up, I know, and I do the same thing. I get into this emotional roller coaster with stocks where you can't sell it, because you're like, if I sell it, then I was wrong, I failed, I made a bad trade, I suck. You get into this emotional roller coaster where you just, if you sell it, you're taking a loss, and then you hear expressions like, well, if you don't sell at a loss, then you've never taken a loss. So people will just hold the stock. And the biggest loss that I ever did when I started kind of swing trading just a little bit was actually with Aurora Cannabis. So, that's not the right one. So Aurora Cannabis was a weed stock, and we had the big weed mania. I'm in Canada right now. And Canadian weed was about to get legalized, and it was going up, and things were awesome. It was so great, and I bought in in 2018. This is adjusted for splits. I think they did a 12-to-1 split, but I bought in. I bought in at 850. I can't really see adjusted for splits. Let's just say I bought in kind of around here-ish. No, I bought in 2018. I bought in somewhere around here. Yeah, I bought in as it came up, and it went up a bit. I think I made 15% on my money, and then it just crashed. And I held it, and then it came up a bit again, and I held it, and I was like, it's gonna bounce back, and I held it, 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 and I lost 95% of my initial investment. I held it right to the bottom, and then I actually think it came back a bit, and then I sold it somewhere down in here. I just finally had to let it go. Is it better to expect tomorrow? I think Wish is kind of a huge company, not like the other meme stocks. Well, Wish its market cap is 6.85 billion. It's about the same size as Wendy's actually. Wendy's is 6.4 billion. AMC, like GME, GME is not a $21 billion company. It's been pumped up so much, right? GME is actually, I think, was like a 1 to 2 billion company. It was actually quite small. And let's just go into AMC here. And AMC is not a $26 billion company. I think it's around a $4 billion company. So Wish is right around that same size. It's kind of the size that AMC should be, and it's the size that Wendy's is. Wendy's is actually a little smaller. Like Wish overall is a bigger company in value wise, but we, like with any company, you need reasons to do it. But let's dive in a little deeper. I haven't actually got to do any fundamental analysis with any of these companies. So let's actually take a look at the company itself and see how we've been doing. So we got profitability. We'll look from 2018. So all numbers are in thousands. So these are in the millions. So 208 million. So if we're looking at earnings per share, took a huge dive in 2020, right? A lot of companies did because of COVID. So we got our income tax expenses. I'm actually going to pull up, I find MSN Money is actually, I can take kind of a better look with MSN Money. We look at our financials. I like how they break it down, right? They really break it down well. So here's our income statement. Here's our revenue and our earnings, right? So revenue going up a bit, earnings not so much, right? COVID, everybody kind of blames everything on COVID. But let's take a look at our balance sheet here. So how are we doing? Current liabilities. Where are we? So we're moving. So yeah, so assets going up each year. That's good, right? We get increasing assets, total assets. So it's growing in assets. It's growing in debt, but not too bad. Total liabilities. Here's our equity. It's a nice jump in equity. And then one of the big things is cash flow. How is it doing with cash? Free cash flow down. It's hard with some of these companies because of COVID, right? So when you look at 3-4 years, and because of COVID, a lot of companies that were growing, they're now not growing because it's crashed down, right? But I mean, I was hoping to see like a free cash flow increase. Assets are going up. That's good. Net income, they took a hit in 2020, down 745 million. I mean, as COVID goes away, can they come up again? Absolutely. I think a lot of companies can. Getting a lot more financing. Yeah, like their assets are growing. So I mean, revenue's going up. That's good, right? You want to see your sales increase growing up, gross profits going up. Expenses, for some reason in 2020, well, again, probably COVID, right? Because the thing with COVID, you still got to pay your rent on your buildings. You still got to pay, a lot of your staff. You still have all these expenses, but you can't pull in the income from sales because now you can only have 2 people in your store at a time, or maybe your store was completely shut down, or maybe how much people are using your product has gone way down because of COVID. So your expenses, they don't stop, right? If you lose your job, you still got to pay your mortgage. It's no different with a lot of these companies. So like potentially the company, before COVID, it was actually growing its revenue at a pretty decent rate, right? That's a pretty good jump. And then cost of revenue going up just a little bit, and then good. That's not so good there. Cost went up more than total revenue. And then 2020, they took a big hit there. And then earnings per share has been kind of going down. So like, can it be a good longer term? Absolutely, but I don't know. It's not looking too good in the short term. Let's put it that way. In the long term, anything can happen. Yeah, you just if they had some catalysts, it would certainly help with going up. So yeah, I think long term, wish its revenue was growing before COVID, so it's not too bad. So it could be a decent long term hold. At $16 a share, I would have set a stop loss to kind of sneak out of that. And then if you like the company, then after the company kind of goes on the decline, then you can re-enter the position. You can buy back at a cheaper price. So that's kind of how I see companies like that. If you really like a company, but they start to decline, you can sell out of the position and then come back in when it goes down. Yeah, no problem, Jaden. If you like the analysis, feel free to give me a thumbs up on the like and a subscribe. It helps me with the channel. Try and get it going, try and get it out there. I'd like to do more fundamental analysis of stocks as well, and not just look at AMC and GME all day and just be like, oh, it's going up, it's going down. Okay, it's nice to get into the companies a little deeper. And then I'm trying to find a way to do like a meme analysis. Like how do you analyze a meme company? And the only indicators I can find are obviously your technical indicators while you're trading, and then like Google Trends, right? You can see through Google Trends, a company like Wish, like they trended up pretty good, and then they just been coming down. So it's like I can't look at a balance sheet as much on a meme stock. Why are people buying it? Why are people selling it? But I can try and find trends on Wall Street Bets or on Google Trends to try and help find little tiny indicators to kind of help if it's going up, if it's going down. So it's a little harder to do it with meme stocks because there's no fundamental reasons that the meme stocks go up. So you can't really pull from that knowledge, right? AMC down 10% now. They're losing the good fight. I'm like, people are taking money out. And I feel bad for people that got in at $60, $65. They just jumped in thinking the stock's going to go to $100, $1,000, $1 million. Like, not that it can't, because it can, but as long as the companies like AMC keep issuing new shares and diluting the stock, I don't think you're ever going to see it go to those levels, right? Like if AMC today shot up to $100, the company would issue another 100 million shares and sell them, right? The company needs that money. That money is going to help them survive. It's an excellent business move. Diluting when the stock is way overpriced, but what it does to your diamond hand shareholders is it dilutes their money, so it makes it a little harder for the shareholders in that sense. But for the company, it's an excellent move. That money can help that company survive or grow and prosper. So it's it's kind of a catch-22. You want to, as a company, you love the support you're getting, and you want to keep those people going, but you also need that money. Like, oh, I can make a lot of money for the business if I reissue or if I issue a new issuance of shares and make a pile of profit off of that. So they're doing the right thing. It's just the AMC, it's not sustainable to just keep going, 10, 15, 20 times the value of the company. We got CLOV down 14%, did a little pullback for the day, on track, 36.76 we're sitting at, up 3.2. On track is just, it's trying to stay on track to stay in the green. Wish we're almost down 6% now. It's trying to find that support around $11. That's like a psychological support level, every dollar increment or 50-cent increment with the smaller stocks. Wendy's pulled back a bit, down 11.2. Let's see how our SBCE, down 5%, pulled back up a little bit. SNDL, we're getting some good buying pressure again, 53.6. We're trying to sell back out around $1.21, $1.22. We bought in at $1.19, I think, or what we buy? We bought it in at $1.20. So yeah, we bought in at $1.20 earlier, sold at $1.21 because it was starting to trend down. We refilled at $1.20, and now I'd like to get a bit better risk reward out of that. So we'll see how it goes. But each $1.20, $1.21 is $100 for us, $100 American, and we've been trading for 3 hours. So if we made $200 in 3 hours, well, that's not terrible. But we did make a mistake, or I should say I made a mistake earlier this morning where it didn't quite, I had to take a 2 or 3 cent loss. So I made a little mistake this morning. What did we do? We bought at $1.22, 23, and we had to sell at $1.21. So we lost a couple, we lost like 2 cents there. And then we made a little over a cent there. Now we're looking to make 1 to 2 cents there. So we made a small mistake this morning, but we did sell before it went way down. So we kind of cut our losses quick. So we had a small loss, didn't turn into a big loss, or a medium loss. I guess it wasn't that big of a loss. And then we are trying to increase. I think I need to come make some profit in AEMD. I was watching that this morning. We'll pull that up here. Get rid of Wendy's. Wendy's is kind of dying. AEMD. Athlon Medical. So yeah, I was watching this morning. They're up 400% to start the day. And the catalyst for it, so there was a reason. There was a reason the stock went up. It went up because they found a way for COVID patients to kind of help COVID patients. It was getting rid of, I'm not too good on the medical tech terminology, but it was a way to help COVID patients recover more quickly and not get so sick, not get so bad. The problem with AEMD and the problem with some of these other companies is that COVID is starting to trend down. Like our cases are going down. Where I am, if everything keeps going well, by July 4th, we won't even have to wear a mask. So as people get vaccinated, and people that are, like, such as myself, I actually got COVID, my family and I, and we recovered from it. We don't need this technology. Like, it's, well, like, where are you going to apply it if COVID starts to become a thing of the past, or starts to just become another flu, which, physically it was like a flu. I didn't have any vomiting, but I had a bad headache. My wife got a bit of respiratory problems, but overall it was, comparable to a flu. But as COVID kind of goes away, these technologies that these companies are developing at the tail end of COVID, how much profitability can they turn out of it? So I would be a little careful with companies like AMD investing when they're this highly priced, right? They're up 360%. So it could be a great company. They'll probably, they'll make some money off that technology, but your entry point is so important into companies like this, right? Obviously, if you would have bought in yesterday, it would have been a way better entry point. But it's new news, it's new technology, it's great, it's trending, everything's awesome. So it's at its peak, and if you buy in there, well, you don't, what's going to keep it going higher. And I think in the long term, as COVID comes down, it's going to be really hard to have a catalyst for the company to continue to grow. So I don't know if AMD would be a good play right now. I would maybe wait and see how that stock's going to play out the next few days. AMC 9.3%, CLOV down almost 15%. If you watched the start of my stream this morning when CLOV was up like 6%, every indicator was saying get out. So I would have definitely got out of CLOV around 6%. I think the short squeeze happened already. It happened yesterday. They squeezed them, the shorts covered, it shot up, people took profits. Like, that is a perfect short squeeze. Quick, fast, get in, make them cover, take your profits, get out. And I think that's what a group of people did. I'm not sure if it was just a group on Wall Street Bets or whatnot, but they just got in, got out, got a pile of money, and left. Just left the institutions or hedge funds or whoever was shorted on the stock with a big loss. You got to remember, like with any stock in the market, it's a zero-sum game, right? So for every dollar you make, somebody else lost $1. For every dollar you lost, somebody else made $1. So it's us against them against us, and it can be quite the battle, and it's hard to be better than the average person or better than an institution. I mean, generally you want to go with the flow, you want to go with the trend. If institutions are buying, you don't want to be shorting. If they're shorting, you don't really want to be buying, in general. A trend is your friend, and you want to try and, go with the winners, go with the big guys, because we're just the little guys, right? And just a little retail investor trying to, make a few dollars trading SNDL back and forth, or I got a little position today in SPCE, trying to trade them back and forth. So it's hard to really compete with all that. So what we're going to do, I'm going to keep going for about 3 more minutes, and then I'm going to take a break here. Got a couple hours of trading in, and I think we might come back around maybe a couple hours before close. Or maybe we'll see how things are going, but it's kind of slowed down a bit. So we'll take a break in a couple minutes. I'll come back in an hour and a half probably, and we'll have some more fun. More. So 2nd to 3rd hour. All right. Thanks for joining me, guys. If you like the channel, give it a thumbs up, subscribe, and we will be back in probably an hour and a half, depending on how things go. Thanks.